Let us begin with cash and cash equivalents, which most of you are familiar with now since we discussed this in the financial statements module. We made a cash flow statement and we are at least familiar with the term cash and cash equivalents. Now, what is cash? When we talk of cash, what are we saying? Cash is that which is available for payment of current liabilities. Why do they specify that cash is that which is available for payment of current liabilities? Sometimes we have cash that is restricted. What do we mean by restricted now? Sometimes a cash is put aside, not available for any other purpose, but for the purpose for which it is put aside. What is that? For example, we may put aside funds in order to be able to pay dividend. So this funds, this cash, we will not use for any other purpose. So to that extent, it is restricted. Sometimes a bank may insist that a loan has been given, and they will insist that some amount of cash be always retained as a balance in the bank account. This would then become restricted cash. So restricted cash would not be cash under the definition of cash and cash equivalents. It would have to be shown separately. So this includes coin and currency. It includes petty cash. What is petty cash? Petty cash is cash which is kept with the cashier to meet certain small expenses or petty expenses. That is petty cash. Savings bank account, checking bank account. Checking bank account is a bank account from which checks can be issued. In a savings bank account, the checks may not be issued. Money can be withdrawn, money can be put in, but it may not be through a checking account, may not be through checks. Though bank account is a part of cash, under US GAAP, an overdraft account is not considered as a cash equivalent. It is possible that an account may go into overdraft during its operations. At such a time, this overdraft account is not taken as a cash equivalent under US GAAP, though under IFRS, it is often considered as a cash equivalent. Now, we said before, restricted cash is not a cash and cash equivalent. So what is restricted cash? Restricted cash has to be shown separately in the balance sheet. It may be current or non-current, and such restriction may be contractual or voluntary. This was the expense I was giving. Suppose I voluntarily keep aside some money, for dividends. That is voluntary. If the bank insists, because the bank has lent me money, the bank insists that I should always maintain a certain balance in the bank account, something like a reserve, then that portion, that much of the money in the bank account becomes restricted cash, but it would be contractual. So it may be contractual or it may be voluntary. If it is restricted for a period of greater than 1 year, it is non-current. If it is restricted for a period of less than a year, it is current, and therefore would be shown separately, whether it's non-current or current, will be shown separately in the balance sheet under the respective head, depending on whether it's non-current or current, but it will not be a part of cash and cash equivalent. The reason for the restriction must be disclosed in the notes to the financial statements. So remember that restricted cash is not considered as a cash and cash equivalent. Reserves. Some examples. Okay, reserves cash for some payment to be made in future, maybe a deposit to be refunded, a minimum balance to be retained in the bank account after taking a bank loan, etc. Now, we did cash And we know that restricted cash is not a part of cash. Now, what are cash equivalents? Cash equivalents are securities with a maturity of 3 months or less, mind you, at the time of issue, not at the time of the closing of the books of account. Securities with a maturity of 3 months or less, they can be easily converted to cash with no risk, hardly any risk of loss in value. Easily they can be converted, and it's not that there will be any significant change in their value when they are so converted. Some examples of cash equivalents would be treasury bills which are issued by the US government. So if it's a 6-month treasury bill, it would not be a cash equivalent. But if it's a 2-month treasury bill, it would be a cash equivalent. Commercial papers issued by companies, short-term government bonds. Again, we repeat, if it is 3 months or less, it would be a cash equivalent. But beyond that, it would be if they are redeemable or repayable after 3 months, then they would not be a cash equivalent. Money market fund or marketable securities. These are examples of cash equivalents.